Sleep 2 Business Genius, Business History, Fact Number 8 of 107-minute read. The ledger that built accounting. From the earliest clay tablets of Mesopotamia to the double-entry ledgers of Renaissance Italy, the slow, patient work of keeping records gave humanity something extraordinary, the ability to understand, manage, and grow wealth across time. By Sleep to Business Genius, Ancient Commerce, Mesopotamia to Renaissance Italy. An open counting ledger with quill and ink, the tool that transformed scattered records into a coherent picture of financial reality and gave birth to accounting as a discipline. Let your thoughts settle. Let the numbers of the day fade. And follow this story back to where order first came from chaos. Somewhere in the ancient world, a person responsible for managing a store of grain, or a herd of cattle, or the contents of a temple treasury, faces a problem that has no satisfying solution. There is more coming in than going out, or less, but which? There are debts owed and debts owing, transactions completed and transactions pending, assets that exist and liabilities that threaten. Everything is known, in a general way, but nothing is clear. The answer, arrived at independently by civilizations from Mesopotamia to China to the Inca Empire, was to write it down. Not in flowing prose, but in organized lists. Columns. Categories. Totals that could be checked against reality and, crucially, against each other. The ledger was born, and with it, the long journey towards modern accounting. Accounting did not begin as a profession or a discipline. It began as a desperate practical need, the need to know, with certainty, where you stood, how much you had, how much you owed, whether you were gaining or losing ground. From marks to meaning. Mesopotamia, Egypt, China 3000 BC onwards, the first systematic financial records. The clay tablets of ancient Mesopotamia were the world's first accounting records, but they were far from the last. As civilizations grew more complex, so did their record-keeping. Egyptian scribes maintained meticulous papyrus records of grain stocks, tax collections, and labor rosters for the great building projects of the pharaohs. Chinese administrators in the Zhou dynasty kept detailed accounts of state revenues and expenditures. The Inca Empire, without writing, developed the quipu, a system of knotted cords that encoded numerical records of remarkable sophistication. What all these systems shared was a core insight, that financial reality, left unrecorded, is unreliable. Memory fades, disputes arise, fraud becomes easy, and planning becomes impossible. The written record was not just a convenience. It was the foundation of trust between parties who could not always be present together, and the foundation of accountability for those entrusted with other people's resources. The oldest balance sheet. Among the clay tablets found at Uruk dating to around 3000 BC are records that historians recognize as primitive balance sheets, lists of assets on one side and obligations on the other. The desire to know whether one's assets exceeded one's liabilities, and by how much, is apparently as old as written language itself. The revolution of double entry. For most of human history, accounting meant single-entry record-keeping, a running list of transactions, like a diary of money received and money spent. Useful, but limited. A single-entry system tells you what happened. It cannot easily tell you whether your records are correct, or catch errors before they compound into serious problems. The solution, developed by merchants in the trading cities of medieval Italy, was double-entry bookkeeping. The principle is elegant. Every transaction is recorded twice, as a debit in one account and a credit in another. If the books balance, if total debits equal total credits, the records are internally consistent. If they do not balance, there is an error somewhere that must be found and corrected. Luca Pacioli, a Franciscan friar and mathematician from Tuscany, published the first printed description of double-entry bookkeeping in 1494, in his landmark work Summa de Arithmetica. He did not invent the system. Venetian and Genoese merchants had been using it for at least 2 centuries, but he described it so clearly and completely that his work became the foundation of accounting education for the next 500 years. Double-entry bookkeeping was not just a better way to keep records. It was a new way of seeing a business, as a coherent, interconnected system of flows and balances that could be understood, analyzed, and managed as a whole. The discipline that made modern business possible. The spread of double-entry bookkeeping across Europe between the 15th and 17th centuries was not merely a bookkeeping story. It was an economic transformation. Merchants who could produce clear, auditable accounts of their business could attract investors and lenders. Banks could assess creditworthiness. Partnerships could be formed and dissolved fairly. Governments could tax trade more reliably. The information that had always existed in scattered records could now be gathered into a coherent picture of financial reality. Historians of economic thought have argued that double-entry bookkeeping was one of the essential preconditions of capitalism itself, that the rational, systematic management of money flows it enabled was the intellectual foundation on which the great trading companies, banks, and eventually corporations of the modern world were built. Pacioli's legacy. Luca Pacioli's 1494 description of double-entry bookkeeping introduced concepts that are still in use today: the ledger, the journal, accounts receivable, accounts payable, assets and liabilities, trial balances, and the principle that every debit must have a corresponding credit. The International Accounting Standards Board, which sets global accounting rules for public companies in over 140 countries, works from principles that Pacioli would recognize. What the numbers always knew. The accountant sitting at a ledger book in a candlelit counting house in 15th century Florence, carefully checking that his debits balance his credits, is doing something that connects directly to the scribe pressing marks into clay in Uruk 5,000 years before. They are both solving the same problem: how to hold the complexity of financial life still long enough to understand it. The tools have changed beyond recognition. The clay tablet became papyrus, became paper, became spreadsheet, became cloud database. But the underlying act, the recording, categorizing, and reconciling of financial transactions in a way that reveals the truth about where you stand, has never changed. Accounting is, at its heart, the oldest form of financial intelligence. And it began with someone who simply needed to know how much grain was in the storehouse. Every balance sheet ever drawn traces its lineage to a clay tablet and a reed. Tags: Accounting History, Double-Entry Bookkeeping, Luca Pacioli, Ledger, Business History, a Mesopotamia, Renaissance, Italy, Financial Records, Sleep Learning, Economic History. Sleep to Business Genius weaves 100 fascinating business history facts into soothing, story-driven narratives. This is fact number 8 of 100. Part of 100 Facts About Business to Fall Asleep To, available as a full narrated video on YouTube.